Hi everyone, welcome to day 2 of BattleFin's TECH.M.E event. We're covering technology, media, and entertainment. Day 1 was awesome. Thank you to everyone, including our sponsors, AWS Data Exchange, the team that put so much effort into coordinating all these, making them run smooth, really pulling the insights out of all the different data providers. So really appreciate that. We have some pretty exciting news. We shared with you some things yesterday, but we are announcing that we're going back to the live event space early. Yes, we had Miami on the docket for January 26th and 27th, but we are announcing our partnership with SALT for September 13th, 14th, and 15th in New York City. It'll be at the Jacob Javits Expansion Center. It's a brand new facility, really just awesome, excited to be there. And for those of you who are familiar with SALT, you know what I'm talking about. This is a pretty amazing announcement. The speakers that they have at these events are, ex-presidents, leaders across countries. You have everyone from the top hedge fund managers to Eric Schmidt to Ken Griffin. So really excited to be partnering. We'll be bringing the data track and really exposing alternative data and data science to this community. We're expecting 2,000 plus people. Awesome entertainment. So we'll be sending out details. If you're a data provider, sign up early. This is going to be big. It's going to be awesome. But today, let's get back to the event at hand and we'll get our first panel started.
Welcome to BattleFin's Virtual Discovery Day. Coming up next, comparing data sets in the employment category. Differentiating between various employment data set offerings. What are the hiring trends in the tech, media, and entertainment space? Joining us on our panel today is Ben Zweig, CEO of Revelio Labs, providing global workforce data including public online profiles, resumes, and job postings since 2008. Tom Aschenmacher, Senior Vice President of Growth at LinkUp, the global leader in delivering job market information. And now, please welcome your moderators, CEO and co-founder of BattleFin, Tim Harrington, and BattleFin Chief Strategy Officer, Ish Pandare.
Welcome, everyone. We're excited to have another great panel for you today. We'll be looking at the employment data sets. I think one of the previous panels that we had with the UMC CFO kind of sparked some thoughts in my mind about inflation. I think he said pricing was up 10% this year, probably going to be up 30% next year. That led me to be thinking about, is it just products? Could it also be wage inflation? Something we may or may not have seen before. There's a lot going on across the country with minimum wage, those being increased. As an investor, you're really going to want to keep a close eye on these different aspects, and really going down to employment data sets is where we think you can really get some interesting insights. For those of you that are Ensemble subscribers, you're familiar with this, but this is our login. You can either use the Data Hunter app and kind of drill right in and ask questions, and the data sourcing team will get back to you. If you're interested in just kind of digging in immediately, you can go to the categories, scroll down to the employment section, which we have about 24 different listings. But today we really wanted to drill down into two companies that we think are kind of the top of the employment data category. So with that, we're going to have Tom take us through some of the LinkUp data, Ben take us through some of the Revelio Labs data, and really try to understand the nuances here, because there's a lot out there, but at the same time, what we think you want to do is figure out the question you're asking, and then always find the right data set for that. So with that, Ben, we'd love to hear a little bit about Revelio and kind of how you guys derive your data and how you differentiate yourself.
Sure. So just how we think about the employment data universe we think there's really two main sources of data. There's online profiles from things like LinkedIn, Jobcase, and others, and there's job listings from company websites, from job posting aggregators. And we really see ourselves, Revelio Labs, as trying to construct or reconstruct what we think of as the universal HR database. So trying to reconstruct the HR database that you'd see in any company. So that you could see how many people are employed, what are their jobs, how many people are leaving, getting hired, how many new postings perhaps are there, get some metrics around salary, employee satisfaction, and really give you as much insight into the workforce dynamics of the company than a company has about themselves, about their own company. So I think that's sort of our main goal, really to sort of give you a look under the hood of what's going on at companies.
Cool. And Tom, over to you for the link up side of things. So it seems like it's a little different.
Yeah, similar, but a little different. Yeah. So LinkUp, we've long been focused on providing perfect job market information. So when we started out in 2007, we wanted to build a job search site where it would be the most trusted job search website for the job seeker. So to do that, we committed to sourcing jobs direct and exclusively from employer websites. So as Ben mentioned, a lot of job search out there is built on aggregation, where you're getting jobs from other job sites. Anybody can pay to post a job listing, things of that nature. We have stayed committed to only getting jobs direct from employers. So if there's a job on our site today or in our database, it's because it was on an employer's site last night. If that employer takes that job down tonight, it's off our site, marked as deleted in our database tomorrow. So we have about 160 million job records from 60,000 companies going back to 2007. So, and that includes the full job record as well as the full job description. And then we append some data as well to make that more useful. So license that data to a wide variety of industries for an even wider array of use cases. And so looking forward to continuing the discussion today.
Great. Well, and I guess help me understand the difference between postings and profiles. It sounds like Revelio is more profile based. But what am I going to be looking for? What types of signals do I get when I'm, looking at postings versus more on the profile side, Ben?
Sure. So I can speak to the profile side, and it sounds like Tom is, the real expert on the posting side. Okay. So for profiles, what you're really seeing is the descriptive dynamics of what's going on in a company. It's not necessarily a leading indicator of who might be hired or who might leave. It's actually who is being hired, who is leaving. So it's purely descriptive. Now, it might be a little less forward-looking because you're seeing what's happening today and yesterday, but you're seeing a lot of depth. You're seeing the types of employees that are coming in and out, and then you can see things like, are salespeople leaving? Is this company offshoring? Are salaries, going up or down? When people get hired, where are they coming from? When people leave, where are they going? There's just a tremendous amount of detail that you can see from the profiles, because every profile is basically a resume. It's a whole time series. It's a very rich set of data, just like extraordinarily rich. So there's just tons and tons of analyses you can do with profile data.
Gotcha. And then Tom, is it a different signal or a different type when you think about the posting side? Is it just number, or is it, what's the real kind of, signal that you think you can pull from the posting side?
Yeah, great question. So like Ben mentioned, the kind of Revelio data is, exceptional for understanding where a company is now and kind of where they stand. And when you start to look historically at job listings, it's much more a signal of intent, right? Like what kinds of roles are they hiring for? How does that fit into like a product life cycle? Like when are they going to market with a new product? How does that impact their performance? And you can start to kind of back test to find things like that, and putting in some more of that Revelio data too. You start to see the company wanted to hire for this. Did they? What impact did that have? So when Ben and I talk about our data sets, they're really complementary, and it's a lot of that kind of supply and demand. So we do see the job listings data as a great leading indicator of company performance, and that either good or bad. But there's a lot you can glean from that, and then even diving further into the job description. So not even just looking at job count. Looking at descriptions, you start to understand kind of what companies are using more like transformative technologies, who's maybe lagging behind there, kind of look at what implications that could have for future growth of that organization.
Gotcha. And would that include, I guess, Ben, like, I've always seen like when Apple is about to come out with, self-driving cars or something like that, that they tend to, maybe start trickling that through some of the different profiles that are coming out, or Tom, would you pick those up first? I guess that would be an interesting question.
I would, in most cases, I would think we would pick it up first, but I'd actually be curious, Ben, if you can glean that kind of information from like a profile change, to seeing if an internal employee has moved to that team or that division, or if you pick that up on skills. I mean, as far as job listings go, and in that specific example, there were signals, a couple of years ago that Apple was kind of starting to hire in that area and looking for, different kind of battery tech roles, things like that. So we did see a bit of that, but Ben, I'd be curious to get your insight on that too.
Yeah, definitely. I think you would probably want to use both. So we actually did a paper exactly on this with B of A. Really tracking to see where Apple was hiring people from. Were they hiring more people from Tesla or Waymo? And you could see like what types of roles are coming over, because with every hire, you don't just see the job title, you see the actual person and their experience and their skills and a lot of information about that. So I think you'd probably want to use both. And just to kind of add to what Tom said about these data sets being complementary, I think there are a lot of uses of postings. There's a lot of uses of profiles. And I think we're seeing more clients, developing new things that you can do with both that you couldn't do with either. Like, let's say you see a job listing, you might want to know, first of all, where are those people coming from? Also, you might want to know, like, let's say a company's advertising for a bunch of jobs. Is that to backfill attrition, or are they growing a division? These are things that you might want to embed attrition data into. And when a company has the intent to hire, do they actually implement that? Do they actually move forward on that hire? Sometimes yes, sometimes no. So I think you probably would want to use as much as you can.
Yeah, and that's interesting too, because especially when you take into account the importance of historical data. Any given time you could look right now. We just did a case study on the financial sector and kind of who's hiring for, like I mentioned, some more of those like transformative tech roles. And you might look at that and say, okay, well, these three companies aren't hiring for those roles, so they must be, not as competitive. But then you go and look and, oh, wait, no, actually they hired for these roles 4 years ago. They're way ahead of the curve. So like you always have to have that historical data piece as well, or you're just never going to get that full picture. But
yeah. And Tom, you guys have two products that link up, or at least that we have on Ensemble. Can you take us through the two and what the kind of differences are?
Yeah, absolutely. So LinkUp Raw is kind of our flagship data solution that includes the entirety of the organic database going all the way back to 2007. So every company, every job we've ever had, it's about 10 files in total. And it includes, the entire job record. So when a company posted a job, the location of that job, as well as, we tag every job with a SOC ONET code to understand kind of to normalize the job titles across companies and industries. We also include the full text job description, as well as a lot of securities identifiers, things of that nature to help folks use the data. So that's, like I say, that's kind of the flagship solution. And then built off of that, we also have what we call core analytics files. So we have two. One is core ticker analytics file, and the other is the core company analytics file. And they show the same metric just for each day that we visited an employer's site, how many jobs were added from the previous day, how many were deleted, how many were active on the site, and then of all the jobs that are active on the site, how long have they been there on average? So you start to get a sense of hiring velocity.
How do you price that, the kind of raw versus, I guess, core analytics?
Yeah, so the raw product, it depends a little bit on kind of the use case, but when you're talking about full application, full universe, daily updates, it's 130,000 annual. And when you start to talk about the core analytics files, they come down from there. That's typically more of a fundamental or discretionary, research use. So that's more in the 50 to 60,000 annual range.
And Ben, can you take us through we have one of your products on, and just how do you guys think about it and price it, and give us the background there?
Yeah, sure. So there's a few different dimensions for how we segment our products. I mean, one is based on the data that's in there. So the data could be based on profiles, could be based on postings, could be based on transitions, could be based on skills, could be based on immigration files and layoff notices. So all sorts of administrative filings. So we could segment the data based on what is provided. We like to kind of include everything. We think the more comprehensive the better. But those are some segmentations. Another set of segmentations is how the data is consumed. So it could be a data feed, which just through S3 or FTP or API or something, and that's pretty standard for teams with data analysts, data scientists. And more recently, we started selling more dashboard access. So the dashboard we have is very flexible. It's very adaptable and obviously self-service, as dashboards are. So based on what we're giving and how much we're giving, we generally price this anywhere from 7 to 10,000 a month. So anywhere from 84 to 120. Could be a little bit more if there's some custom analyses, could be a little bit less if it's a really small coverage universe, or just restricted data. But generally that's the range.
Okay, great, and thanks. But yeah, let's move into some more, I guess, topical or things that are going on in the world now. I'll hand it over to Ish to take us through a couple questions.
Thanks, Tim. So, we've been getting a lot of questions about inflation from our clients, from our subscribers, from data buyers. We hear about it on TV all the time, and we see it, we experience it in our everyday life. Maybe, both of you could opine on how your data could be used to maybe track inflation or get an early signs on which side it's moving to, and what do you foresee?
Yeah, so
yeah.
I'll kick this off, I guess. I mean, so we do see salary data from job listings from aggregators, from immigration filings. So we get about 180 million salaries in the U.S. In the U.S., it's where you get the richest salary data. So we can see how wages are trending every day. So first of all, I do want to say that wages are the most important prices in the economy. I mean, this is I think Janet Yellen was the first one to sort of make the case for this, and I think that's still standard in monetary policy and now fiscal policy. So I do think that this is what policymakers are looking at. And we have not seen inflation. We've actually seen slight wage deflation, which is very interesting because it's not so consistent with the labor shortage narrative that's getting out there. And just for those of you who haven't been following as closely, we're seeing large growth in new job listings, but not a big growth in employment. So that's led some economists to say, oh, maybe we have some labor shortages. I don't think that's the case, because if that were the case, we would see wage inflation. So I think, this is still something of a mystery, but my best guess at this point is that employers are starting to put feelers out there for jobs that they might not have not have the intent to bring on. If they were really desperate for these jobs, I think we'd see a pickup in wages, but we don't.
Thank you. Thank you. What about you, Tom? What do you see?
Yeah, I mean, I think it depends a lot on the role, right? Like I think we've all been waiting for years and years for wages to kind of pick up. You know, we've been waiting for that wage inflation, and it just hasn't happened. And I do think that we'll start to see that some later this year. Now, you know, where and how that's represented in some of our data sets, that, you know, that'll remain to be seen, just because I think where we'll see most of that inflation more quickly is kind of, you know, in some areas that won't be as widely reported on job search sites, and, you know, places like Glassdoor and, you know, Indeed and other places where people will report what they're making. But I do think, you know, it'll be a little bit slower. It'll take people a little while to realize you know, like obviously, you know, consumer price index is up quite a bit. So that's, you know, that's more immediate. And I think it's going to take a number of months, if not a few quarters, for the labor market to catch up and start to pay people more. I think it's kind of the last thing anybody wants to do. So it'll take a minute.
One quick question. I just wanted to jump in, Ish, before your next one is like, I guess, how do you think about that relative to like what's going on with like unemployment benefits and things like that? Like, you know, so much of even monetary policy, these are things we've just never had before. So, you know, in COVID and all these different things, like you hear on the news, all these restaurants trying to hire people. You hear, you know, so many other businesses that are just like, look, I can't handle, I mean, I can't bring on more people. I was at a hotel a couple of weeks ago, and I think the staff said, or the manager said, look, we're at 100% capacity and I'm at 75% of my staff. You know, is there a way, or are you guys, do you think, when would this start showing up in the data? Is it, you know, a couple months? Is it, you know, what would you be looking for?
I would think, you know, that there's a bit of it, you know, that it's all, you know, geographical and localized, kind of based on, you know, and it depends a bit too, if you buy into the argument that unemployment, you know, payments are keeping people from going back to work. And if you do believe that, you know, then it's going to change by state, right? Because some states are implementing legislation more quickly than others that prevent them from distributing those funds. So you'll likely see people going back to work, you know, sooner. And they, you know, they will demand more pay. But there are also more systemic things too, right? Like you hear people talk about, I can't find childcare, so I can't go back to work. So there are things like that that are gonna really slow things down. And so that's why I think it'll be a number of months before we see that wage inflation kick in.
And just one more comment on what you mentioned earlier, Ben, about wage inflation too. So based on profiles, you know, you don't see wage inflation, but we do see people changing jobs, you know, not just new jobs, but people are moving to new jobs. And that could be driven by many different factors. But one of those factors also tends to be, you know, higher salaries. So, you know, very interesting to get information from you that you don't see it in the data yet, you know. So people are moving for other reasons.
Yeah. I mean, we don't see it. So it could be that what people are looking for in their job is not salary. Maybe people are driven by other forms of compensation, better, you know, experience and work-life balance, all of that. Could be. I mean, I think you know, I don't necessarily believe the unemployment insurance story, because to the extent that unemployment insurance is giving people a substitute for finding a job, that would also shift labor supply inward, which would also put upward pressure on wages. So I think if that were the case, then we would see even more pressure on wages. So I think this has to be a demand story, a labor demand story. I mean, I haven't seen any other good hypotheses. So I do think that what we're seeing is that employers are not quite ready to be paying more for talent.
Great. Well, unfortunately, we're actually out of time, but there is one way that the audience can get a bigger look into this, and that's by setting up meetings with Ben at Revelio and Tom at LinkUp. So would encourage everyone to log into Ensemble, use new calendar functionality so you can book these Connect meetings. We've just kind of touched the surface. There's so much more. There's how does this data differentiated versus other players in the space. So we highly encourage you guys to do that. Really just wanted to say thank you to Ben and Tom and Nish for being on. We'll also be putting out some exploration kits and some cool things and comparisons on Ensemble. But really, guys, thanks for joining me today.
Thanks.
Yeah, Tim.
Thank you.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now. And now, a special data drop from Ensemble provider, GfK Boutique Research.
I'm Adam Kurtzer. I've been with GfK around 6 years, and I work in the sales director capacity. So today, specifically, I wanted to speak about GfK's global transactional database. We're focusing on consumer tech and durables, and it's the largest in the world as it relates to these segments. We're capturing direct sales from hundreds of thousands of online and offline retailers in 75 countries. And we're doing this to the magnitude of about $1 trillion in annual consumer spend. So leveraging this same data set, specifically in the categories of handsets, PCs, IT peripherals, TVs, etc., we want to bring everyone's attention a potential crack and prolonged headwind appearing in the GfK point of sale data set through May, and one we're watching closely to see if it will persist in June and the second half of 2021. So if you look at the first chart in the top left, clearly you can see how strong demand has proved to be since the first wave of lockdowns in 2020. In fact, revenue was actually positive in 2020 due to the strength in the second half and the overall mix shift of premium device purchases. So this is offsetting massive declines in the first half. So if we fast forward to 2021, as you can see with the orange line, in January and February, due to continued strength in IT peripherals and PCs, home appliance upgrades, and premium handset purchases, we're seeing a lot of momentum. However, in March, you can see the slowdown where we're actually below 2019 aggregated demand levels, essentially proving to be a pull forward in the back half of last year as the world is now opening back up. As we move into the second half of 2021, the year-over-year comps are getting increasingly challenging. And as demand slows, there appears to be potential inflections brewing, specifically in China and to a certain extent, Western Europe. China is a great capture for GfK on the chart on the right, one of which we have 80% unit capture, tier 1 to tier 5 cities, and 155 cities in total. January demand for these categories had about a 19% growth, while now we're into the latter half of Q2, and we're down to negative 5% growth. So within GfK, China has largely been ahead of the curve in terms of recovery from COVID, and we stand to believe this could be a leading indicator for other geos throughout 2021. So if you look at the chart on the bottom, on a category basis, there's a few categories that are leading to the slowdown. So PCs and peripherals, naturally they were a strong force in 2020 as the work and study from home trend, but demand has slowed considerably with the world opening back up. Same with handsets, as the year started off strong in 2021 due to launches by Chinese manufacturers, Oppo, Vivo, and Xiaomi. As we moved away from these launches, demand is also taking a step back. So that gives a little overview of some potential cracks in demand on the tech side. Naturally, we're capturing this data at the country, brand, and model level. So we can certainly go into trends related to PCs, TVs, handsets, etc., and potential headwinds for companies related to those areas such as Apple, Intel, Qualcomm, Samsung, Whirlpool, and many others that may be exposed in the second half. So primarily we work with premier hedge funds that are focused in tech, so tech and tech hardware. And use cases is understanding consumer end demand Our point of sale panels were built to work with the manufacturers. So it's actually having a leading edge in terms of how they're running their business and understanding what consumer end demand is actually doing in an objective and quantitative manner, understanding market share shifts, understanding flagship launches, understanding the industry as a whole, and again, doing this on a quantitative and objective manner. Yeah, so thanks for everyone for listening. Hopefully it was helpful and informative. If anyone is invested in consumer tech and would love to speak further with GfK, we are on the Ensemble platform. And if it makes sense, we'd welcome the opportunity to speak further via a Connect meeting.
If you'd like to schedule a Connect meeting with GfK, please indicate your interest now. Coming up next, the return of live events. With Rolling Loud announcing a live event on July 23rd, what does this mean for the rest of the live events industry? Looking at music festivals, concerts, live sports, and more. Joining us on our panel today is Garrett McDonald, Executive Vice President of Strategic Sales at TECH.M.E, providing global real-time location-based consumer transaction and COVID-19 data. Juan Gomez, Insight Expert at ForwardKeys, the most comprehensive global analytics firm for business intelligence, tourism, and travel trends. And now, please welcome your moderator, BattleFin Senior Vice President of Sales, Alex Perlin.
All right, so now for a hot topic on the forefront of everybody's mind these days is certainly the return to live events. What kind of travel trends are we seeing as the world reopens here since this pandemic? We have two wonderful companies with us today, ForwardKeys and TECH.M.E. I'm going to let both of you introduce yourselves briefly and give us a quick overview of what you do and your role there. And why don't we start with you, Juan, for ForwardKeys?
Thank you, Alex. It's a pleasure to be here today. For those of you listening to us not knowing who ForwardKeys is, we're a travel intelligence and analytics company that for the past 11 years has helped businesses and organizations in the travel and tourism sector to anticipate traveler demand and understand current trends. The core of our business model is the use of data to help our customers make decisions based on facts and not wishful thinking. We work with numerous destination management organizations across the world, as well as hospitality companies, duty-free operators, airports, retail brands, casinos, hedge funds, and other financial institutions. Our mixed data sets are integrated into several of our products, and then further enriched with additional insights provided by analysts like me, leveraging our extensive industry expertise. For this reason, key industry players such as the UNWTO, the World Travel and Tourism Council, and IATA rely on our sources of truth. We monitor, so you get an idea, over 17 million booking transactions a day in real time to anticipate travelers, and we also offer supply and demand information. We have flight searches to help measure travel intent and other data such as air seat capacity provided by airlines that helps you understand the supply as well and the changes, especially in a moment like today with so many changes and at so very last minute. This data has a great granularity that goes all the way from continental to airport terminal level. So it is indeed really helpful to monitor the evolution of the pandemic, not only in a difficult situation like we are now, but also in normal situations as well. We've come a long way, but definitely nowadays the important use of the data when no one knows what's going to happen tomorrow. So it's always good to have that really strong and good data to base your decisions.
Okay, and thank you, Juan. And so quickly before I turn it over to Garrett, so your data type is essentially covering business insights, consumer insights, macro, private company, and transport. Is that accurate?
Yeah, it's all to do with air travel. So yeah.
Okay, so Garrett, now from TECH.M.E, can you give us a brief overview? We need to find this whole panel is going to give our audience the travel trends and as the world reopens here. So
right. Yes. Thank you, Juan, and thank you, Alex. It's great to be here, and I appreciate the time. So hopefully you can see the slides there. Kochava has developed a marketer's operating system, which is a platform that helps advertisers and publishers invest in growth of their app audiences and their web audiences, to monitor and streamline their data feeds, and really act as a system of record for how they should invest in growth across all of their different marketing initiatives. Think of Kochava as like a CRM for identity and data management. And we measure all of these different signals. So whether it's email campaigns or SMS or search or social or digital, or even CTV or connected TV, and whether it's a website or an app, all of these different events and engagements with these touch points along that consumer journey are measured with our platform. And then through a presentation layer and analytics, marketers are able to really get very granular with their visualizations of that data to make better decisions on how they invest in growth. All of the data is is protected, and really we're just stewards of data for our customers. And these are enterprise customers like CBS, NBC, ABC, Disney, et cetera, et cetera. And having said that, we launched a free version of our enterprise measurement platform called freeappanalytics.com. It's entirely free and unlimited in exchange for a transparent first-party license to the data from those mobile apps and websites. And so with that data, we're able to see very granular data on points of interest or precision geo, other behaviors and interests, carrier info, and perhaps most importantly to this discussion is around the combination of precision geo and POI data sets with app graph and app usage or app activity, the events, the registrations, the purchases, the bookings, whether it's tickets or hotels or other types of booking apps. That can be incredibly valuable when combined with other demographic data sets, and then, in fact, mapped back to the household. So really rich and granular data set on over 10 billion unique mobile devices that we've observed over a 5-year historical period. So there's also a nice history to look at trends year over year and how, pre and post pandemic, and how things are changing pretty rapidly with the return to work and other increases in vaccinations and perhaps getting back to travel, both personally and professionally. So happy to be here, and thanks for the opportunity.
That's great. That's very interesting. I like how you said and overlap that potentially. So you take Forward Keys and Kochava, and correct me. So essentially your data, Kochava, is to analyze consumer foot traffic trends, brick and mortar stores and other points of interest. And then you can overlap that with air traffic from Forward Keys potentially, right? Okay, so go ahead.
Oh, I was just going to say, yeah, everything is keyed off of either a mobile ad ID, a mobile device ID, or a first-party cookie, or a hashed email address or an IP address. And so, provided that Forward Keys and any other partner really could match to one of those 4 match keys, you can look at all sorts of different foot trends, foot traffic trends. We can look at device location, dwell time, even proximity movement data across a particular threshold. There's all sorts of interesting insights that can be gleaned from the data set. So yeah, I hope that helps.
Great. We were all sort of remarking on how the world reopening, I'm kind of seeing, some parts of the world reopen and then close back again. Juan, as we were discussing, we're trying to reopen. I think everybody is desperately anxious to get back to in-person live events. BattleFin has certainly booked our first live event for 2022, January 26th and 27th in Miami. So we're hoping that the trajectory continues in a positive trend. So maybe Juan, can you tell us what you're seeing? I know we had this Bitcoin conference in Miami, 12,000 people were registered, 40,000 people showed up. Do you want to focus on that to start, sort of what the trends that we're seeing here?
Yeah, absolutely. I mean, since the beginning of the pandemic, as you were saying, global international arrivals and also domestic have declined by approximately 80%. I mean, it's been a complete disaster. I mean, there's no, secret to that. I mean, everyone knows that. Recovery has taken place unevenly, and now sun and sea destinations in the Caribbean, for example, are benefiting the most, pushed by the strong demand from the USA. The USA is definitely one of the best examples in the world of travel recovery, not only domestic and intra-regional, that would count all these Caribbean destinations, but also to intercontinental trips to Europe. US travelers are already booking to travel to some destinations in Europe, such as Greece. Of course, the vaccination rollout is behind this reactivation, and we know that the vaccination rollout has been quite uneven in the world. Going back to the example that you were mentioning about this Bitcoin conference, our records pointed to a 40% increase on arrivals on that week of domestic arrivals in Miami versus the same period in May 2019. So it's a huge increase. We're not talking about recovery, we're talking about increases on 2019 levels. The same story also applies for the rest of the summer. We were a few weeks ago expecting, or we launched a study with that we were expecting the US domestic travel to recover by the beginning of August. Now we've had to update this recovery, I mean, this, let's say, calculations that we have. And now we expect recovery looking at the level of confirmed tickets for domestic US travel to beginning of July, being the same week of the 4th of July. So, I mean, this is very encouraging, but of course, going back to that event that you were saying that is now all over in the press, we really need to be careful with the messages that we send. People is definitely willing to travel, willing to meet with other people, willing to go on holidays, but definitely they need to do so in a safe environment. We're still fighting this pandemic. So obviously, if this is not done correctly, it could be, that we were going backwards.
Yeah, because we're seeing now that the press is saying there's an uptick in COVID from that specific conference, right?
Yeah, I mean, we are confident that the pent-up demand for travel remains strong. We've seen that here in Europe. We've seen strong releases of pent-up demand, all that frustrated demand that couldn't go anywhere because of the travel restrictions. I mean, travel restrictions still remain an obstacle to unblock this demand, and governments have an important role to play, as well as companies and destination communicating early on their readiness to welcome travelers. And I guess it's the same with these type of events. People are willing to get back to their. I think we've had enough of Zoom meetings and online events. We want to meet again with people physically, but again, it needs to be done properly and carefully, so people have the sense of safety.
Garrett, what are you seeing, in some of these trends that you're seeing with your data specifically as it relates to live events?
Yeah, so we actually make the data available to data science teams to really analyze and produce, their findings. We don't necessarily do the analysis on top of the data. We really sell the ingredients and provide the raw data feeds at massive scale for a lot of research firms, financial institutions, hedge funds, real estate companies, even universities and other organizations that are not-for-profit organizations looking at movement data. And the idea is that a lot of it comes down to the fact that you really can't prepare for what you can't see coming. And so a lot of these organizations are using the size, the breadth, the depth of our data set to really come up with a lot of these findings. In terms of I guess overall assertions, the largest craze that we saw over the last year is the increased engagement with camping and outdoor and other kind of lifestyle activity type apps, where whether it be a trail map or campsite bookings. And then as you saw, kind of the phased reopenings across many of the world's largest cities, some of them have sort of walked that back here and there, but with that phased reopening, we saw, some categories still continue to suffer with things like movie theaters and shopping malls, and a lot of those traditional brick and mortar companies have had to get really innovative with their approach with contactless pickup and shopping and all sorts of different engagement opportunities to kind of differentiate from their competitors, and also create a value for some consumers to actually visit their physical locations. We saw a pretty healthy resurgence in travel and hospitality with the increased availability of vaccinations, and then a lot of the different return to work protocols. We saw, with a lot of the standardization around event protocols and like basic event safety steps that really help limit the spread of the virus, whether it's requiring certifications at the door upon entry, or whether it's QR codes that we have some proprietary technology that we developed that help these events and other organizations really kind of track and manage and understand movement as well as engagement of their users in a privacy safe and compliant way with that's consented at the user level. And so we saw over 80% increased engagement with travel booking apps. We saw that music fans, 75% of music fans are happy to return to live events. Whether these events are actually going to be filling up stadiums is still, sort of TBD. But there's a lot of, sort of smaller scale events that are happening. Artists are kind of getting back on the road. There's an increased amount of the artists that are booking for 2022 over prior years, even pre-pandemic. We're also seeing payments in ticketing apps increase about 20% over prior year. And so there's a lot of signs that indicate a return to some sense of normalcy. Although, kind of just jumping the shark, the prediction, or my prediction, is that it won't be till 2022 where we see stadiums fill up to 100% capacity. I mean, UEFA Championship Soccer is really the only event that has one stadium in Budapest that is going to be at 100% capacity, whereas all the other stadiums are kind of like 20 to 30% range. So I think it'll be 2022, like Q2 2022, where we will then see a return to sort of, live, large scale events. Hope that's helpful.
Juan, I was thinking we've got the upcoming Olympic Games in Japan. Are you seeing anything along those lines with,
The Olympics are a difficult one because, of course, Japan lately, I mean, apart from all the changes that they've been, doing with the dates and etc., like it doesn't seem like it's going to be a massive event where international travelers will be able to go there. I mean, I think it will be.
Is way behind.
I think it will be a very limited, amount of people that will be able to get there this year. But following on what Gareth was saying, I think one of the trends that we've seen for the past year and a half was how short in advance were travelers booking their trips, and now this is something that is changing. It's changing already, which gives us the hope that things are changing for the better, and of course help us make predictions as he was saying, to maybe predict that things will be back to normal sometime in 2022. For example, if we look at the amount of, and I'm gonna keep using the example of the US domestic travel because I think it's an amazing success story. We have now 40% more bookings confirmed for travel in October than we did at the same time in 2019. That is in itself is amazing news. I mean, for July or June, we have about 11% more than 2019, but for October, we have 40% more. So that means that people do really expect that comes October, they will be able to do some full travel without as many restrictions as they have now. And I think, again, that applies the same for events, going back to travel, and of course, the much awaited business travel recovery, which is still lagging for obvious reasons.
So bottom line, everybody is anxious to get out there and travel.
Definitely.
Yeah. So we'll wrap it up here. Just one key takeaway that both of you guys can provide for our audience. Our buyers want actionable insights, as you know. Is there one key takeaway you can suggest here?
Yeah, I think people and businesses need to be as smart as they can. Don't be afraid of data, and use the best data that they have available. Our data, for example, allows businesses, as I was saying, to anticipate and prepare for travelers. With our data, they can anticipate the demand and impact of an event, or in a specific period. Real-time nature of our data allows our customers to track changes daily. Are bookings increasing or decreasing? Are we seeing a wave of cancellations of existing bookings? And taking these confirmed bookings, what is the origin of travelers, the route they're taking, length of stay, type of passenger, everything. I think, I mean, in some sectors of our industry, people have been, a bit afraid of data. But I think now more than ever, we really need to base all our decisions in the data that we have available. So I would tell people to don't be afraid of data, be optimistic about the future, and try and make a success.
Perfect. And Garrett?
Yeah, sorry, go ahead.
Go ahead. Just one actionable insight you can give our audience here.
Yeah, I was going to agree with Juan. It's really important to have determinism in the data set too. The accuracy of the data is super paramount, because there can be a lot of false positives and head fakes. And so that's why it's great to work with a partner like Forward Keys and Kochava Collective. And I guess one of the things that we have seen is, and it's no surprise to any of us, right? Like Juan mentioned at the top of the call here today, the streaming apps are having a banner year this year, but the data is really showing that people miss that human connection, that human interaction, whether it be at a conference or with family. Some families are seeing their parents haven't seen their parents for the last 18 months. And so there's really important steps to take to make these events safe, whether it's leveraging innovation and technology with QR codes and other kind of contactless mechanisms to drive engagement, but also to understand movement. And then also, the safety protocols are pretty critical for giving people the confidence to travel. And like Juan was saying, people are planning in advance, where it was perhaps, over the last 12 months, it's been kind of spur of the moment travel. We're seeing as businesses begin to pick up travel in Q3 and Q4 of this year, and personal travel increases. We're seeing a lot of that, more of those bookings more in advance. We're seeing a lot of increase in international travel as well. And so very optimistic about what the future holds for us. And again, thanks for having Kochava today.
Wonderful. So we will all try to keep on this positive trajectory, and hopefully we will all see each other in Miami in January for the BattleFin.
I can't wait.
All right. Thank you, Juan and Garrett. Wonderful. And we will all see you soon. Just a reminder to everybody, both Forward Keys and Kochava are on the BattleFin Ensemble platform and available for meetings. So please request a meeting after this panel, and we will happily set that up for you.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now. And now, a special data drop from Ensemble provider Equilar.
Hi, I'm David Chun, CEO and founder of Equilar. Pleasure to meet everybody. Equilar has been around for just over 20 years. We have built what we're calling the world's most connected network. We've been tracking executive and board data over the last 20 years. And you'll see us cited most recently in the New York Times around their CEO pay study, the Wall Street Journal, CNBC, and others. And while collecting that data, we built, think of this as a LinkedIn of the C-suite in the boardroom. So we've got over 1 million executives and board members with very robust work history and timelines. And the other interesting piece is that we've also tracked points of connectivity, who's overlapped with who at the various companies in somebody's work history. There are a number of interesting use cases with our data. Good example here, I'd like to highlight two briefly here. One is on the buy side. One of the things that we track are the vesting of equity awards. And this is a tremendous signal. We had a couple of PhD students at Columbia do a study of this. And, when an equity award, so we track when the equity award was granted and then map out when it's going to vest. And so we can help people identify big, important milestones that are coming up. And the big question is, what does an executive do on that vesting date? Does the executive sell? Which more often is the case that they sell, but they're not forced to sell. And if they decide to hold, that's frankly an implicit buy signal, potential good news that's coming out, and they feel that, hey, the stock's going to continue to appreciate from there. And they were able to show that there was a abnormal return about 5 to 6% based on this information. The other interesting area, as Ed pointed out, kind of this world most connected network, helping private equity firms, investment banks, corporate banking, basically take advantage of all the business development opportunities and the networks of people within their community. And so we have an app for Salesforce, but more importantly, how do we help clients unlock their networks and get connected to key individuals or opportunities through warm introductions rather than through cold calling. So there's a lot of interesting applications associated with our data, very horizontal play, whether it's the buy side, whether it's the sell side. And we're more than happy to help people better understand the way they can unlock their networks and take advantage of the people data and available through Ensemble. Well, thanks for taking the time to learn about Equilar. It's been great being part of the session here. More than available to have deeper dives with anyone who's interested in learning more about our data set. And please reach out. We're looking forward to following up with you individually.
If you'd like to schedule a Connect meeting with Equilar, please indicate your interest now. Coming up next, FANG stocks. Using multiple types of data dashboards to make better investment decisions regarding FANG stocks, including insights on Facebook, Amazon, Apple, Netflix, and Google. And what is the next FANG? Joining our panel today, Milind Sharma, CEO of QuantZ Machine Intelligence Technology, allowing you to evolve traditional stock picking with machine learning enhanced equity smart betas. Alejandro Rojas, Director of Applied Analytics at Parrot Analytics, providing real-time, country-specific consumer demand for thousands of TV titles in hundreds of markets. Michael Lucente, CEO of Precision Alpha, providing machine-learned equity measurements that are not explained by traditional market metrics. And now, co-founder of Market Rebellion, the best options education and trade idea services in the industry. Your moderator, John Najarian.
Hello, folks, and thank you for joining us. I know you're going to enjoy the insights of the speakers that we've got for this particular segment of the BattleFin presentations. And I know that the three gentlemen who are presenting today have already sort of wowed us with what they have presented in the pre-calls. So like I say, I think you're going to be pretty taken with exactly how they do what they do. If you'd like to, of course, this will be posted up. The full presentation will be posted up to all of you who have registered. So we really appreciate you joining us. And with that said, I'm going to basically introduce all three of our speakers. We've got Milind Sharma. He is the CEO of QMIT. We've got Alejandro Rojas, Director of Applied Analytics at Parrot Analytics, and Michael Lucente, CEO of Precision Alpha. And we've had very positive comments from members of this group in the past. I'm sure this will not be an exception. And here we go, getting started with Milind Sharma. So Milind, thank you for joining us today, sir. How you feeling?
Awesome. Well, great to be here with you, John, and hope to be live with all of you at BattleFin sooner than later.
Oh, I look forward to that too. And Milind, for some of the folks who have not seen you at a prior BattleFin, could you give us a little background on yourself before we get into some questions, sir?
Oh, absolutely. So I've been around for about 25 years running hedge funds, mutual funds, prop desks at the usual names like Merrill Lynch and RBC, Deutsche Bank, and all of that before I launched my fund. Most people know us as Quantzi Capital, the Stat Arb Fund. It's been around for a dozen years now, and more recently, in the last couple of years, we've actually pivoted to being a signal provider. So we've actually taken what we were doing for a long time, which is factor investing, and sort of turned that large factor library with machine learning sort of enhancement into derived signals that you can either use to invest in thematic smart betas or combine sort of combo multi-factor signals for, market neutral, long, short, whatever kind of investing you wish. So it's sort of reaching out to a broader audience by licensing out those ideas.
Well, so thank you for that. Let's get started with maybe an examination by you, Milind, if you wouldn't mind, about how factor quants have fared in the first half of 2021 thus far.
Awesome. Thank you for allowing me to share a couple of slides here. So why don't we just jump to this first heat map here, because it has actually been truly an extraordinary first half of the year for factor quants. In fact, we haven't seen anything like this since the NASDAQ crash, which put my career on the map. I mean, at the time we'd done rather well in the with the Merrill Lynch funds I was on. And we've seen some truly extraordinary what I'd call the double alpha coming both from the long and short side. Now, this may seem odd because at the beginning of the year, we all remember what happened with Wall Street bets and the GameStop madness. And yet, despite all of that, I ran this, I think the slide is from mid-May, when we saw some of the signals hitting 60% year to date. Our flagship Fab 14 was up to 56%, value plus momentum was up to 60. So, those are extraordinary numbers. That's like 300% annualized. Obviously, that's very anomalous. It's not going to happen all the time. It's not sustainable, but it's noteworthy that, this kind of an extraordinary thing can happen. So the real question is, why did it happen? Right? I mean, and as I mentioned, despite the GameStop madness, what you notice is that actually roughly 1/3 of the returns are coming from the short side. So that's the more interesting part, is that, the shorts have managed to contribute year to date. And maybe if I can jump to the second slide here and just show you what really happened, because in the early part of the year, up until roughly mid-Feb, when the sentiment around the FANG names changed pretty dramatically, as you got the rate rise sort of inflation there kicking in, and then all the FANGs in your Cathy Wood type of names sold off pretty dramatically. And in this slide, I've got essentially the top 10 names in ARK from their filings, and you can see that pretty much all of them were shorts in our model. So this column here, Feb 12th percentile ranks, that's when ARK topped out. And you can see that, like Tesla was 14th percentile, but Teladoc was right at the bottom, 2nd percentile, Unity Software at 3, Spotify at 3, Twilio at 5. So pretty much all of these names were, at the very bottom of our model ranks. And not surprisingly, if you go out and look at the whole sort of liquidation episode, which bottomed out on May 13th, the average drawdown in these names is 35%. So it's actually, that's why the double alpha in the model kicked in, because, it sort of was, the model saw all of this coming, and historically it's had a very strong track record with bankruptcies, all the Krispy Kremes and JC Penney's going back many years. I've seen so many of them having traded this model for over 20 years. But so it's been truly extraordinary. And, if you just look at the chart of the model scores, against the price action, it's easy to see how this kind of played out in year to date, right? So initially, many of the stocks ran up during the GameStop madness. So here's your Teladoc running up from 200 to almost 300. whereas the model score is still at the bottom, practically at zero, and then eventually it collapses and trades all the way down to below 140. Same thing with Tesla. You get the initial pop, coming right out of the gate this year, and then over time it sort of fades more gradually. So that's kind of been the theme across the board for a lot of the FANG names that we've seen. And, you might say, well, where does that kind of leave us now? And this is sort of one pair trade that I would suggest at this juncture, which is, if sticking with some of these auto EV related names, we've got a pretty high score in Ford right now. So if you want to pair that up with something like a Lordstown Motors or Nikola, that's a pretty good pairs trade. Although on the short side, arguably some of the bad news is now out from last week when I first mentioned this name. As you know, the CEO resigned yesterday, the CFO resigned, the company said they may not be a going concern. So a lot of the bad news already out of the stock, but I think it does show that the model has some predictive efficacy on the short side.
Yeah, and by the way, how often do you do these pairs trades? Do you find that the correlations are good enough when you start and then trade that divergence?
Well, so we actually just FTP or transmit in some other manner the entire ranks file, right? So for essentially all of the liquid institutionally tradable US plus Canadian and ADRs, our universe comes out about 2,800 stocks a day. And we just transmit all the alphas as z-scores, percentiles, and then usually the quants know what to do with that. They plug it into their optimizer, or quantamental folks may look at it with other considerations. So it's not necessarily that you have to do a pure sort of co-integrated kind of pairs trade, right? Like it doesn't have to be pure stat arb. It could be any fundamental value growth PM who just looks at it and says, okay, maybe there's a variant viewpoint here worth considering. I mean,
well, thank you for that, Milind. I'm going to jump to Alejandro Rojas, Director of Applied Analytics over at Parrot Analytics. Alejandro, we looked at some pretty interesting slides from you as well. Would you mind sharing some of that with us now?
Yeah, so let me give you first, before we jump in.
Oh, and a little background. Sorry about that, Alejandro.
Yeah, a little background in terms of what we do. We actually built this patented system that tracks audience behavior. So we can actually track thousands of shows in hundreds of countries, and we go to the granular level of we can actually tell you for a specific title, how people interact with it, from a Google search to a Wikipedia visit to even like piracy torrents, which is like really every day. So they have a sense of volume. Like we collect like millions and sometimes billions of torrents. So then like you add everything else, like YouTube watching and all of that. At the end, we have a data set that is just massive. And essentially it's built so that we can track individual titles. So how do we leverage this from an investor's perspective? That's what I want to share today. And I prepared a presentation for this. The particular case that I want to discuss, obviously, is Netflix. And what I want to kind of walk you through is the way we think about leveraging our data to really providing a very simple answer to a question, which is like, are they going to meet their net subscriber addition guidance, So obviously every quarter they have a guidance. What we do is like we actually track, how like their content is doing, not only in the US, but we do this globally. So the big advantage of this is that we have that perspective. So that you have an idea of how this would work and how this looks like, let me just walk you through some of the things that we have found, over time. And then let me just walk you through this. Like, essentially, we say that demand drives subscribers because all of these activities that I was describing serves almost like as a sales funnel, where like all of these activities are going to end up as being converted, enable you to convert these people into subscribers. When we track this globally, and we're using here like the regions that Netflix defines, so UCAN, EMEA, LATAM, APAC, all of those, we can track on the vertical axis. What you see is the number of subscribers that Netflix has, okay? And on the horizontal axis, what we have is actually our metric, which is demand. And we actually track this on an individual title basis. So every row that you see in there is actually an aggregation. So when you look at the top row, for example, in there, we're looking at the demand of all the original content of Netflix, okay? So we track that demand, we have the demand of every single original over time, and then we compare that against subscribers. What we see in all of the regions, there's a strong correlation. We do the same exercise for like all the exclusive content. So not only originals, but also licensing content that they may have in exclusivity. Again, like the same correlation we find, and that's what you see in the middle of the section. And then in the bottom section, the bottom row, we actually track all the titles. So imagine all the titles that they have in their catalog. We add the demand of every individual title over time, and we compare that against the number of subscribers. We do this for hundreds of countries. What I'm showing you in here is actually a representative sample of how do we track, for example, in the case of UCAN, how do we track the US? In EMEA, how do we track the UK? In LATAM, how do we track Brazil? But in truth, it's like we track all of the countries that belong to that specific region. So essentially, this graph can be replicated across like hundreds of countries. And what you see in here is like every single quarter we're tracking this, where we see I think the line is like, it's clear that, basically demand serves as an indicator of how many subscribers you're gonna have. And that's really the point that we have. And now the next, I guess like the next step is like, how do we leverage that to know if they're gonna meet the guidance or not? And in there, like really what we have done, and again, like I'm also just giving you an example because like this is like a massive model that we can do. But in here, only looking at the US and only looking at the originals bucket that I showed you before, we basically looked out over the last 17 quarters, and we see when like they actually like beat guidance and when they miss guidance. So whenever they beat guidance, is the green dots that you see there. Whenever they actually miss guidance, it's the orange dots that you see. And then in here, I'm just giving you some sampling of like some of the metrics that we have. But let's explore one of these so that you guys know what I'm talking about. So in this like bottom corner, on the left corner, we have demand as a share, okay? So really what this is measuring is like, imagine like the originals in the US for Netflix, what is the share that they're getting, in terms of the total demand for the total direct to consumer market. So that's one number. Then the other number that I'm seeing here is the decay. And the decay is essentially what is the decay of the library of original titles that they have. And by that, I mean, it's like, how much is that has that declined over quarter? These are two metrics that we can combine or we can calculate based on our data. And what you see here, again, we can start doing analysis and seeing like when is it that they actually beat their estimates and when is it that they don't. And in blue, I don't know if you see it, but in here, this dot in blue is actually in this second quarter. So what you see is like if you look at this specific square, again, like it looks like this blue is in the middle of the green section. So it looks like, yeah, they're gonna beat their guidance based on only this, this analysis. If we go on top, again, this is another metric. We look at the mean shift. It means like really is like the average demand for the total catalog, but actually from the last quarter. And what we see there is like if we actually analyze that, then it's a little bit harder to tell if that's going to be a beat or it's going to be a miss, right? So again, like these are just examples. We do this like measuring like a number of like metrics. So with that, we can create models that basically can allow you to predict. And we have done like, so that you get a sense of like our accuracy. We get like over like 90% accuracy in terms of estimating when Netflix is gonna beat their net ads number. So it's a lot of analysis going into this, very granular because we go on a title by title, but then we actually roll it up. And then based on that, then we can tell you, how Netflix is gonna do. And we can anticipate, what's gonna happen the day of the earnings. And then the last thing I want to share is like, the same sort of metrics that we use for Netflix, we can also use for some of the other streamers, right? Like Amazon, HBO Max, Disney Plus. So with that in mind, essentially now we have a model where we can actually replicate the same thing with all the other streamers, and then we can tell you, ahead of their earnings release, if they're going to meet their numbers or not. And that's really, I think, what's powerful about this is like, essentially, if you think about like the job that we're doing is goes back to the title of the presentation, which I call it now casting Netflix net ads, because really it's not forecasting. We're actually collecting data as we speak, right? So we know if the content is resonating or not. And then based on that, we can tell you if they're actually going to be able to meet their subscribers figures. So that's really what we do, and it's exciting to be here, and I appreciate the opportunity to share these insights.
So now we've all got a new term too, not forecast, but nowcast. So thank you for that. Michael Lucente is a repeat person on BattleFin. And Michael, we certainly appreciate your sharing your insights of Precision Alpha. Could you give the audience just a brief background of yourself before you start?
Thank you, and thanks, BattleFin. I went ahead and shared my screen with respect to our measurements on Amazon, and I'll just page down to the probabilities we have for Amazon on a given day over the last several months from March until June. My background, I ran a multi-billion-dollar family office outside the United States for about 3 years after I left Merrill Lynch. My partner has a PhD, and he's the smart guy, and in theoretical physics and applied math from Cambridge. His mentor at Cambridge was Stephen Hawking, and our company Precision Alpha delivers daily file feeds of precise, unbiased, machine-learned market signals for any financial market globally using the client's own data or our closing price data. And 90+%, more than 90% of our signal is idiosyncratic. So it's not explained by other market factors like volume or economic data. What we're seeing is pure alpha. And here's the truly extraordinary part. We routinely reveal movements in security prices 1 to 3 days before they occur. I'm going to show you that momentarily, but I just wanted to talk for a moment about how we do what we do. With deep neural nets, random forest, logistic regression, all of these build on the same mathematical machinery of the scientific method. But statistical near equilibrium assumptions are typically made, and numerical algorithms designed that produce numerical estimates for market quantities like probabilities, for example, are estimated. And what we've learned through the scientific work of Marcus Lopez de Prado and others is that financial markets are not in equilibrium. When statistical equilibrium assumptions are introduced, numerical algorithms, estimates are introduced early in the scientific analysis, scientific quantities that we would expect to see, like energy, resistance, power, noise, are out of reach. And estimates on top of estimates hide useful and intuitive market information. Precision Alpha also uses the scientific method, but only Precision Alpha starts by calculating how far a security is away from equilibrium, and equilibrium being a 50-50 probability. You can see Amazon right now, today, is a 50.85% bullish. The green line is bullish next day probability. Once we have a precise next day probability, from there, we calculate the emotion contained in price movement. In scientific terms, the energy driving a security further away from equilibrium or back toward equilibrium. No assumptions are introduced. We let the market speak for itself. next day probabilities, energy, resistance, all of the fundamental qualities in scientific signal processing are calculated daily. So as a result, we're delivering non-equilibrium market information that is currently completely unavailable to market participants. And what our insights demonstrate is that securities, you can see, Amazon has not been at equilibrium since March 25th. And we see securities moving away from equilibrium for weeks or even months at a time. The critical point is that where non-equilibrium trading strategies are used, they can exploit the non-equilibrium behavior. So let me show you the movement here in Amazon. You can see the security price peaked on April 29th at a price of $34.71. The next day, April 30, still trading essentially at the same level, $34.67. Amazon fell from that point all the way to a bottom of 31.51 on May 12th. That's a drop of 300 points. Amazon, as I said, was trading at equilibrium back in March. You can see that the next day probability is bullish. What did we see in our calculation of energy? On April 29th, we saw our measure of energy bottom. When free energy is declining, and it began declining on March 31st, all the way until April 29th, the security price on a bullish security is increasing. And that's exactly what we saw with Amazon. As soon as we saw the turn on April 29th, and then the next day, we saw free energy change and free energy reversed for the first time. So now free energy is rising, which will cause a bullish security to decline. And lo and behold, on April 30 and April 29, Amazon peaked and the price began to fall by 300 points all the way until May 12th. Now, what do we see right now in Amazon? You can see that Amazon, the energy, is trading in a much tighter pattern. And what our clients are doing right now are selling short-dated calls, 2-week calls. They know that not enough energy is being released to drive Amazon away from its current price range. And they're picking up 1.7% as a premium for a future call. What do we see in other securities? Take a look at Facebook right now. Just plug that into our model. Facebook is trading currently at a price of 336. Facebook is at equilibrium, market power of 0, next day probability of exactly 50-50. But Facebook has a tremendous amount of energy that has built up. What you will see is as soon as Facebook releases either bearish or bullish, that energy will be released. And that security is going to run either if energy drops and it's a bearish next day probability, Facebook is going to run to the bottom. If it's a bullish probability as it breaks out, when the energy is released, Facebook is going to run higher from the current 336 price point. You can see it's clearly 50-50 right now at equilibrium. What do we see? Everybody asks about the broader market. What do we see for the Qs? Let me pull up the Qs. And ETFs are you never know what's in these ETFs, so they're not a perfect estimate. And by the way, you can plug in any security, download a free trial of our app at precisionalpha.com, and you can plug in any security. Of course, our institutional clients get measurements for every single security on whichever exchange they subscribe every single day. So right now, the Qs are trading at 342, yesterday's close. You can see it's a very strong bullish next day probability, 50.85%. Markets are reasonably efficient, but markets are not at equilibrium. They're not 50-50. They're close, but they're not. You rarely see probabilities moving beyond about 53%. But right now you've got the Qs there, but look what you see in the energy. You've seen the price rise in the Qs beginning on May 12 all the way to right now. And what's happening in the energy? The energy for the queues has bottomed and began to move the other direction. So the energy has been fully released. The price of the queues should begin to fall. And that's exactly what we're seeing. If you follow, and by the way, when we've calculated energy, until about 6 weeks ago, we were measuring the total energy contained in price movement. We've been able to refine that calculation further, and now we're using free energy, which is a physics term, which is the portion of the energy that is actually doing work to drive the price away from or toward equilibrium. And when you've isolated that, when you've isolated the free energy, it's really an incredibly revealing. It's really an incredibly revealing security. So before I turn it over back to John, I would just like to reiterate that many of our clients upload their own price data to us for any market, and we return our measurements securely and privately. This is faster, more secure, and less expensive, and gives clients the confidence of using their own data. Precision Alpha can complement statistical financial modeling. The scientific signals generated by Precision Alpha can be embedded into other machine learning analyses without introducing additional parameters. We are limiting the number of clients by virtue of the power of our signal. So please take a look at us, contact us at precisionalpha.com. We're pleased to be here today with BattleFin. John, we appreciate your attention and support today. And thank you. I'll turn the screen share back over to you.
Great. Well, Michael, thank you very much for that. We'd love to hear a little bit, Melinda, if you wouldn't mind, just quickly as we're wrapping up, about how people could go find out more information about QMIT from what you've done over there as the CEO of QMIT and Quanzi. You're muted. Sorry, there you go.
How's that? So, thank you. Yeah, I mean, we've got a ton of webinars in our website, and we're available for meetings. Hopefully, you can book one through Connect with us, and would love to give you a better sense of how to, how we go about these sort of machine learning enhancements. Because at the end of the day, if you just want to build your own library of factors, you can go to the various sources, the CompuStats and the Bloombergs and FactSets and whatnot. But what we're doing is something very different. We're really taking the basic building blocks and turning it into highly customized sort of signals that can be plug and play. So you can directly plug it into your hedge fund, mutual fund, whatever structure and type of product it may be. And that's what makes it rather different is the degree to which it's customizable, right? Like, regardless of your investment philosophy, if you tell us you're a GARP manager or you're a deep value guy or whatever it is, we can make it work that way. But beneath the cover, there's a whole ensemble learner that's going on across different types of, we're doing all sorts of risk parity and random forest and this and that. But the beauty of it is that you don't need to, just like, the iPhone user doesn't need to know how the code's written and how the actual stuff works, right? I mean, we're not trying to overwhelm you with all those details. I mean, the bottom line is, if you're a fundamental guy who understands growth and value, you can pretty much understand everything we're doing. The stock picks will make sense to you.
John, a lot of our clients, what they do is they start with a macro view. They may want to pursue financial stocks, for example, or have a macro view. And then they use the signal to determine entry and exit points. You could see we saw the turn in Amazon a few days before it occurs, and right now it appears the queues are going to turn south in a hurry. So we'll see how that prediction works out.
Fantastic, thank you, Michael. And Alejandro, if somebody would want to learn more about Parrot Analytics, how would they connect through BattleFin, but if you want to throw out a site to send them to, that would be
Yeah,
fantastic.
I mean,
as
like
well.
you can go directly to parrotanalytics.com. We, apart from like having the data set that I just shared, we actually like write a lot of insights in terms of the industry, or where the industry is going. You know, we are in a unique position where we actually see how audiences are reacting to all of these shows that are being made available by all of these streamers, and not only in the US, but globally. So in a way, it's like it's an amazing data set to really answer like a very diverse set of questions. We work with investors. We also work with media networks. We work with producers. So it's a very like diverse set of like use cases that can leverage our data set. Very unique in that sense.
Well, I want to thank all three of you gentlemen, Milind Sharma, Alejandro Rojas, and Michael Lucenti. Thank you guys for the presentations today. And of course, to our hosts here at BattleFin. Thank you.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now. BattleFin exists to help buyers and sellers of alternative data meet and expedite transactions on a global scale. We do that through our online data marketplace called Ensemble, and up until recently, in-person, curated face-to-face meetings at our Discovery Day events. Now, even though we've gone virtual, our mission remains the same. Introducing BattleFin Connect. A Connect is more than just a virtual meeting. It's a powerful communication tool to assist in the buying and selling of alternative data. Thanks to our Ensemble platform, where both parties are vetted and already operating under an NDA, buyers can schedule as many meetings as they want, at whatever time they want, and get right to the point. Show me the data. Show me the data! Exactly. The fact is, many of the data providers on Ensemble have white papers, case studies, and even sample historical data for their products available right now. A BattleFin Connect also includes access to our data sandbox, where you can actually see the structure of the data and understand better what you're working with. Booking a Connect meeting is simple. Once you've found a Connect-enabled provider of interest to you, click Book a Meeting. A calendar will pop up. Look for the times the data provider has indicated as available. If there are none, simply select the day you like and pick a time for the meeting. All times are adjusted to where you are, so keep that in mind when scheduling with providers overseas. BattleFin takes the pain away from data sales and expedites the whole process. So stop wasting time. Do data now with Connect, only on Ensemble. Coming up next, recent regulatory developments. iOS 14.5, Supreme Court weighs in on Computer Fraud and Abuse Act, and more. The debate around privacy and app development. What is it, and what are the consequences? Joining us for the conversation is Peter Green, partner and vice chair of the Investment Management Group at Lowenstein Sandler, a national law firm representing clients in virtually every sector of the global economy. And now, please welcome your moderator, BattleFin co-founder, Mark Lopresti.
All right, good afternoon, ladies and gentlemen, and a big welcome once again to the BattleFin Nation. I am Mark Lopresti, co-founder of BattleFin, the leading enterprise in the alternative data space. I am joined here once again by the yin to my regulatory yang, the great and irreplaceable Peter Green, who of course runs the hedge fund practice group at a small boutique law firm called Lowenstein Sandler. Peter, thank you so much for joining us once again here for BattleFin Day 2, Virtual Discovery Day. Second to last panel, folks, you're almost there. We're going to keep your attention with some riveting updates on regulatory changes, legal changes. We've actually got some news to talk about since the last time you all joined us. Peter, once again, thank you for being part of our panel.
Always happy to be the yin to your yang, and thanks for having me. And I agree, we do have some good, new, juicy, current stuff to talk about.
We absolutely do. And I think maybe we should just dive right into it. Big news, perhaps the biggest, certainly for the lawyers and the folks that enjoy reading long and learned opinions. The first time, I think the first time that the Supreme Court of the United States, or SCOTUS as we call it, has had a matter of law that applies directly to the alternative data space with the recent Van Buren case. Peter, do I have that right? Is that the first time the Supreme Court had an alt data matter before it?
I think that's right. It's not purely an alt data matter, but I think that's right. It's the first time that the Supreme Court has spoken in the last handful of years on something that touches, and it really does touch the alternative data space. And let's just dive into it. So the name of the case is Van Buren, and it was a Computer Fraud and Abuse Act case. But why it's interesting, it was a hacking case related to a police officer down in Georgia. So not having anything to do with a buy-side hedge fund scraping data. But why it's interesting is it gives us some further guidance, and of course from the highest court in the land. So it's really helpful guidance that I think we've all been waiting for as to what it means to scrape and access information on the internet. You'll recall, Mark, that there's this HiQ LinkedIn case out of California that is also before the Supreme Court, and that we think this very week, this Thursday, will go to conference before the court, meaning the court will decide it, and maybe we'll see an opinion or just maybe a short dismissal or affirmance of that case in the next week or two. We think they were waiting on this Van Buren case. What this Van Buren case says that's really interesting, and then we can apply it to scraping, is that once you're lawfully in, so you haven't hacked, you're in lawfully into a particular database or site or whatever the case may be. If you use the information from that site for a purpose beyond that which you were admitted to the site. So you're admitted to the room. Let's think of it in a non-technological perspective. You were admitted to the room. You're lawfully in the room, but now you're doing something in the room that the owner of the room said, oh, wait, I didn't want you to do that. You were only admitted into the room for purpose A and B, and now you're doing C. That use of data for a purpose not permitted when you access the site is okay. It's not a violation of the Computer Fraud and Abuse Act. So why does that matter? That seems like a real technical hacking, cybersecurity type thing. Well, why does it matter? Now let's harken back to a case like LinkedIn, where you go on the website, you're a buy-side person, you go on a public portion. We always talk public-private, and we'll come back to that. You go on the public portion of a site, you're there lawfully, and then you breach the terms of use. You use the information for a purpose beyond that which permitted in the terms of use. And the owner of the site, the LinkedIn in the example, says, hey, wait, you can't do that. Well, the court, in the context of the Computer Fraud and Abuse Act, is saying, yeah, that's not a violation of the Computer Fraud and Abuse Act. Someone let you in. You're lawfully there. It's public. So someone like a LinkedIn can't let, we think, everyone use its site, no password, no authentication gateway, be on the public portion of its site, and then still legislate what you are and are not allowed to do once you're on the public portion of the site. It doesn't work that way, either public or not public.
Even if your motives are unpure, perhaps,
sure.
which is really remarkable. And Peter, let's just take for a minute, just a step back. We have to sort of assume that everybody in the audience is not as learned and up to speed as you on the CFAA and what this applies to. And I hearken it back, to use a turn of phrase of yours, to previous webinars that we've done, where we've laid out for the industry, buy and sell side, where the hot button areas are of potential liability in terms of consumption and use of data. And we've talked about breach of terms of use, right? The terms and conditions that you click and agree to when you log on to a website, and how that action, that activity, can actually lead to liability civilly and criminally, I think, under the CFAA. Put that in context, because I think that's important. We've said a mouthful and it sounds really technical, but this is really big news when it comes to data and the regulatory framework that we operate in.
So you and I know the thing that keeps us up at night is insider trading, the securities laws. We're always worried about, are we violating the securities laws when we scrape or when we consume data, whether it's app data, social media, sentiment, satellite imagery, credit card, financial transaction, geolocation, whatever it is it okay? And, you know, we always talk about the three elements to the crime, just really quickly. Is the information material? Is it non-public? And how did you get it? And the reason that all types of data, Mark, all buckets of data end up usually, not always, we have to do our diligence, and you and I will talk about that at least a little bit later. The reason they all end up being okay is because that third element, that is it okay that I have access to it? Data provenance, as we call it, is clean. Mark Lepresky's credit card statement says that his credit card provider can take his transaction data, de-identify it, and sell it to whomever they'd like, and they don't have to get Mark's consent. And they don't have to share the compensation with him, the revenue with him. So, Mark, the information may be material. It is non-public, but the data provenance is clean. Well, scraping is different. Because scrape data, let's assume it's material. Otherwise, why are we talking about it? Maybe it's not. Maybe there's some argument, but we assume it is for the sake of our discussion and our analysis. Let's assume it's material. We know, if we skip to that third element of data provenance, we know the terms of use you just talked about clicking through, Mark. We all do it multiple times, probably every day. We never read it. We'll come to that later, I think, a little bit on our next current in the news topic. We never read it. And those terms of use say, you can't scrape. Don't scrape my website expressly. Don't use a bot, no robots, TXT, nothing. Well, wow, that seems really alarming. How could we ever scrape then? Wouldn't it be insider trading? No, because remember, there are three elements. Yes, it's material. Yes, you have a data provenance problem with scraping that you don't have in all those other subsets of alternative data, but the information is public. The internet is public. If you have a computer and an internet connection, you can get to the data. And so if something's public, it's not insider trading. Now, it may be, as you say, civilly concerning, because the operator of the site may say, hey, Mark, you're scraping my site and my terms of use says don't do it. Yeah. Generally, where the market is, we're not incredibly worried about that. The difference between a cease and desist letter from a website operator telling you to stop using the site and the DOJ knocking on your door for insider trading is big a difference as you probably could have in the law. And so that's why we're not as concerned now. I know it took me a long time to tack back to your question, but that's why this opinion, which is not about scraping, is so important, because it says essentially what it's saying once you apply it to scraping, at least preliminarily, what I think it's saying is once you're in there lawfully, once you're on the public portion of a site, yeah, maybe your motive is impure. Maybe you're doing something the site operator doesn't want you to do, but it's public. You're on the public portion of the site. And that's exactly, Mark, not as obtuse, we're applying now a Supreme Court case to scraping. That's exactly what the judge, also not a scraping case, in the HiQ LinkedIn case said. The judge said, public portion of a site, not behind an authentication gateway, that's public. And so what we're trying to answer, and what this case helps us answer, and then I'll throw it back to you, is what does it mean to be public on the internet?
Right. And it also reduces, it eliminates the potential of criminal liability, right, under the CFAA. So it takes the Justice Department completely out of the game, which is an important element. And two, it reduces the terms of use liability from having a CFAA violation, right, which is a specific federal statute, which may have damages and things associated, to basically a breach of contract in a general civil context, and reduces the likelihood, at least in my mind, of the site operators having too much ammunition to go after people for potential terms of use violations. A very, very important decision.
I think that's right. I think unless your scrape is so invasive that it's impairing the performance of the site, or you are competing with the site, or you're infringing the site's copyright or intellectual property, those three no-nos, unless you're doing one of those three things, I think the likelihood of you getting a cease and desist letter is just really low, because I don't think the website operator really ultimately cares, as long as you're not impairing performance of site, competing or infringing on its intellectual property.
Peter, does Van Buren address that issue of the taxing the website, hitting it so often that the counterparty, potentially has a claim under CFAA related to that?
I believe the answer to your question is no, Mark.
Okay.
We're just not there yet. We'll be very curious now to see what they do with HiQ LinkedIn. They may just say, hey, we affirm the Ninth Circuit's decision and send it back there. They may dismiss. There may not be an opinion at all. I suspect there may not be, but we'll see. They've had that case for, as you know, quite some time, a really long time. And the suspicion, and it's just tea leaves, is that they were waiting on this Van Buren case before they ruled on the HiQ LinkedIn case. But we'll see. And I think we'll see soon now.
I would have to agree with that completely in terms of the reading of the tea leaves. And I've learned better than to disagree with your prognostication. So Van Buren, just to tie it up in a bow for our audience, Van Buren, a win for data providers, a win for data buyers, one less thing to worry about.
I think that's right.
In those 12 or 13 elements that we've talked about before. It's complicated. It's definitely an issue you want to understand, both as a provider or a buyer of data. You know who to reach out to if you want more on Van Buren. But Van Buren is not the only big news since the last time we joined the BattleFin audience in the regulatory world. Folks, everybody on this webinar has noticed that when you go to one of your many popular apps, whether it's a Seamless, Uber, Instagram, you name it, that there is a pop-up, there is a permission request specific to the sharing of your location data with the app. Now, you may have been asked to permission the sharing of your location data previously with these apps, but it's coming up again now. Peter, why is that? And what's going on here with this new permission?
So it happened to me literally twice this morning, and I chuckled knowing we would talk about it a couple hours later. I think it's happening to everybody multiple times every day. It seems to be rolling in, right? It didn't all happen in one day, but every time you now go to an app for the first time since iOS 14.5, since this change that Apple instituted, you will see that one-time choice, allow tracking, not allow tracking. So why is this so important? So we have talked for quite some time, Mark, about privacy and permission to track and geolocation data. And geolocation data is arguably amongst the most valuable and sought after type of alternative data out there.
Absolutely.
So why is this so important? You and I have speculated for quite some time that the federal government, we think, will step in and say, hey, yeah, we know that buried in the terms of use that nobody reads is some consent for you to be tracked, whether it's the Weather Channel app tracking where you are to tell you that there's a hailstorm in the area, whatever it is. We know that there's a permission somewhere in there, but we, the federal government, they haven't said this yet. You and I have speculated. We, the federal government, don't think that that consent is really meaningful. No one reads that. It's buried in there. Yeah, we know they click a box, but they haven't really, the user hasn't meaningfully consented to be tracked. And so Apple, and we know that Apple cares a lot, professes to care a lot, some might say, but I think actually genuinely cares, my opinion, about your privacy. And you see the ad campaigns they've been running. They've spent a lot of money on TV and other ads over the last several years. Hey, we care about your privacy. Well, so now Apple, it seems, has, I think, gotten ahead of the federal government and said, you know what? Maybe we, Apple, also think the consent hasn't been so meaningful, and we're now going to make it really simple. You and I had talked about big red letters, larger font for consent up front. We weren't kidding. That, hey, some of
those GDPR elements, right, Peter? Some of those GDPR elements that it can't be an 8-point font on page 407. It's got to be page 1, plain English. Anyone can understand. It's some of those characteristics. Am I right?
Absolutely. And we thought the federal government would go there and make consent more meaningful by making it more conspicuous, standalone, page 1, top, larger font, colored font, something like that. Well, Apple really, in my mind, has stolen the thunder from that, because they now have come out with something that's really simple to understand. It is one question. It is big font. You can't use the app until you answer the question. And it's right in your face, and it's understandable, and it's conspicuous. And I think because of that, I feel better now about app usage, because app data now has this real meaningful consent from the user. Yes, you can use my data. You can track me. I know you're going to track me. And I've said it's okay, by the way, or that it's not okay. So why is that important? It's important for 2 reasons. One, it's important in that I just think the consent is more meaningful, and that will make the regulators, I expect, more comfortable. Why else is it important? What I think we now all want to know, and we can't know yet, it's so new. I think iOS 14.5, if my memory serves me correctly, came out in late April 20 something. So it's brand new. Maybe even, it might have even been a little bit later than that. So the question is, what will that do to all the data sets that our clients buy, Mark? Will so many people opt out? Will you and I and our families and friends opt out such that the population of the data sets that our clients buy, that the buy side consumes, has been reduced so much that the data now is not as useful for its financial predictability and the use combined with fundamental analysis? And I think we don't know the answer to that question yet. People said the same thing, Mark, after GDPR. Wait, what's going to happen? Are data sets now with EU citizens in them going to become useless because everyone's going to opt out? And they didn't. I think the best estimates we've heard over there are that you lost about 10%, maybe 15% of the population, and the data sets at 85, 90% are still very useful, and people still want to buy them and consume them. But the question is, will there be so many fewer people in the sets that they become useless? I think not. Or just less useful such that the price drives down, such that the buy side says, oh, I want to pay less for this now. Your population sample, your sample size in this data set is small.
Well, I think what the buy side needs to do is, it's a cost benefit analysis. And at the end of the day, if we're keeping score, and I know our friends at BattleFin like to keep score, I think this is another win for the data business. And I'll tell you why. I think this makes it less likely for the government to actually pass a federal GDPR type of legislation. You've heard nothing about it out of the Biden administration. It does not appear to be on the priority list with the new FCC chair, or frankly, anybody else that's involved in regulating this particular industry. It improves the quality of the data from a provenance perspective because it eliminates and mitigates that risk of, does this geolocation data that I'm buying, was this obtained in violation of privacy or things of that nature? And if the EU statistics are any indication, and I think they are,
yes,
it's going to be a small price to pay for those two benefits. So iOS 14.05, the new consent for geo, win for the data providers and the data buyers. Peter Green?
So I hate to agree with you, but I agree with you. I think it's absolutely a win. It gives us much more clarity. We've been seeking clarity. It gives us much more clarity. The consent is more meaningful. It does steal thunder from the regulator. I think it's absolutely a win. Anything that makes this less murky in some sense is a win. And this makes it less murky, and I think is a positive. One thing to watch for is, what will Google do now? Will Android follow and do the exact same thing? If they do, I don't know what the market share numbers are there, but between Apple and Google, we're pretty much locked in then. And then really the government, as you say, seemingly may have much less reason to act, at least on the meaningful consent to be tracked aspect of all of this.
Well, so Peter, I'm unfortunately, with my next topic, I'm gonna drag you out of the clarity and back into the murk for a second.
Yeah.
We got to talk about the new recent changes with TikTok's terms of use in terms of collection of biometric data. And this may seem innocuous. This may seem like something that doesn't really matter, but when you read it, as we unfortunately do, and you understand what you're consenting to allow TikTok and arguably the owners of TikTok and who's behind the owners of TikTok to gather and analyze, it's not just your face, your eyes, it's body measurements, it's all biometric data that could be captured. Okay, why is this relevant, and why did I put it in the context of the murkiness where we've got two elements of clarity with Van Buren and iOS 14.5 or 14.0.5, and now we're talking about TikTok. The reason is the following. States, there's only 4 states last time I looked that require someone to get consent to sharing of biometric data. New York, California, Texas, and I forgot the 4th one. Other than that, as a user of this app, and I think you're going to see this extend beyond TikTok, they don't even have to ask you for your consent to collect this information. We're talking about your image and your likeness and your biometric information. Scary stuff. Peter, comment on that for me.
Yeah, so I agree. Scary stuff, very new. Scary stuff. I didn't like it when I read it. It means that body measurements, facial recognition, size of your head, all these things can be captured. It hasn't really gotten the attention I would have expected it to get. I think it will. And then you overlay the China aspect here and the back and forth between our government and the Chinese government with respect to the sale of TikTok. And you get pretty nervous. And so I agree, more murky now. Biometric data, as you know, is a newer type of alternative data. It's not brand new anymore, but a newer subset of alternative data. And so you do worry what people are going to do with biometric data. But if biometric data can be packaged to analyze what particular people of certain demographics, Mark, are going to do and how they behave and what products they may or may not buy, and with respect to that behavior, that makes you pretty nervous. There's been proliferation, maybe is too big a word, but there's been a proliferation of biometric data. You still don't see people buying it as much because I think we're just not sure how it's going to help and what it's going to do. But if TikTok is now able to capture this type of data, and if TikTok does it, others will follow, right? Anyone where you put up your image, likeness, video, photograph follows. You would think change is coming with respect to that type of data, right?
Yeah. Well, you could see, and I think, we're looking a little bit at where the puck's going with biometric use of alternative data, the biometric data as a category of alternative and how it would work could be used in terms of triangulating, right, with geolocation and other data sets. Correct. To try to get a better bead.
Where's Mark going, right?
Yeah, that's
right.
Exactly
or
correct.
Or people of Mark's demographic, where are they going?
That's absolutely right.
That makes you uncomfortable.
It sure does. And the reason I brought this up is not only to highlight the issue, because we like to get ahead of things and not be before them. And I think that, the whole biometric thing is going to be something 2 years from now we're going to be talking about on these BattleFin conferences. We're going to have providers of biometric data that are actually part of the ecosystem. But the reason I brought it up is that murkiness, that still competition, if you will, or uncertainty, where we do not have a federal GDPR, we do not have a federal level legislation around alternative data. We have this patchwork of state laws and rules, part of which that LinkedIn case that we've mentioned a half a dozen times today relate to. How does this help or hurt in terms of having the data provider world and the data buyer world understand how to navigate this when you have a situation where, as I said before, only 4 states have even contemplated having any sort of requirement for apps or data providers and data gatherers to even ask you whether or not you can share this information? What does that highlight?
I think, first of all, it's going to be more than 4 states pretty darn quick. States have moved pretty quickly on these issues. And this TikTok, because TikTok is so big and so well known, I think it will force more states to adopt laws similar to, and you are right, I'm pretty sure you're right, it is 4 to those 4 already. I think biometric data is something to be careful about. So in terms of what it means, I'd be nervous to buy biometric data right now because I think regulation, at least on a state level, is going to come. And again, data provenance. If you're not allowed to have it and you're breaking a law by having it, that's the hook for insider trading, which is the existential risk to all of our clients and what we worry about so much with respect to the diligence, onboarding, and consumption of data. So for me, biometric data, it's not a no, but it's certainly a do a lot of diligence before you buy it to make sure that your data provenance is clean, if it can be.
Well, Peter, I'm getting the wrap it up signal for our friends in the BattleFin control room. Once again, you and I have chewed up 30 or 40 minutes in very rapid succession. A lot to talk about. It's not often that we have this kind of timely and topical news in the regulatory construct that applies to alternative data. Folks, if you have questions about any of this that was not answered live during this webinar, please reach out to us directly or via BattleFin. You can find Peter very easily at Lowenstein Sandler. He is arguably one of the most knowledgeable people in the space, without a doubt. Peter, it's always a pleasure to have you, and thank you so much for your continued support. And I want to thank all of BattleFin's sponsors. We look forward to seeing you again very, very soon. Peter, I'll let you have the last word.
As always, great to be with you. Thanks, Mark.
Thank you so much. We'll see you again soon, folks.
Bye now.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now. No matter what anyone says, in alternative data, finding signal is hard. As the leader in the space, BattleFin is driving the future of alternative data sales with something we call exploration kits. Exploration kits are like data roadmaps designed by you and hosted on Ensemble. These kits show buyers how best to use your data in a practical sense. Creating one will accelerate your sales process because they help data buyers understand what they're looking at faster. And because they're hosted inside BattleFin's Ensemble platform, you can leverage fundamental and reference data from Refinitiv, as well as combine multiple data sets to unlock and find real alpha. Give examples, use cases, and build models that highlight the power and alpha generating capability of your data. Every data set is different, so there's no template we can share for building a toolkit. But the process of starting your exploration toolkit on Ensemble is very simple. Just log into Ensemble, navigate to the Sandbox tab, click the plus symbol, and create a new Python 3 notebook. This is the interactive computational environment where you describe and illustrate the steps data buyers can take to access your data's insights. For example, you might start with a code to have Ensemble pull your dataset into the sandbox. Now maybe you pull in some reference data and limit that to a certain time frame. Now combine those two sets into a table and create a delta column. You get the idea. You're literally giving them the codes and sequence of steps they need to analyze and understand your dataset faster. Simple, right? Look, the alternative data space is evolving. It takes a lot more than conversations to close deals. If you're interested in accelerating your sales cycle, BattleFin believes exploration kits are your answer. For more information, visit battlefin.com. Coming up next, video games, virtual reality, and more. Looking at Roblox and subscription video games, as well as the differences between VR and AR. What innovations will occur in virtual events? Joining our panel today is Neil Barber, Associate Research Analyst at S&P Global Market Intelligence, a web-based platform that provides access to over 550 alpha factor signals to optimize your research and portfolio construction. Lauren Davis, Vice President of Corporate and Product Strategy at Factious, transforming raw financial transaction data from legacy technologies into actionable information. And now, please welcome your moderator, BattleFin CEO and co-founder, Tim Harrington.
Welcome, everybody. Thanks for joining us for this next panel. I think a lot of the listeners and Ensemble subscribers have heard us talking about video games and a lot of the different app usage panels we've had in the past. But today, I think it's very timely given the amount of vaccinations we're seeing, given the beautiful weather, at least in Connecticut, New York, the Northeast. So without further ado, I think we should kind of just dig right into the topic and see where there's opportunities using data to make money. You heard the preamble from both companies, both speakers. So let's just dig right in. Lauren, tell us a little bit about what you guys do at Factious, and let's jump in.
Yeah, thanks, Tim. So at Factious, we work with financial institutions and banks to safely take the transaction data they have and bring it to market. So we have a large and growing consumer debit panel that we offer in various forms, from transaction level all the way through summarized formats that we offer to both quantamental and fundamental funds.
Great. So, I guess the first question I'd have for you is, hearing that it's debit and credit cards, how does this relate to video games specifically, or AR, or, how could someone in the audience use your data to, get insights?
Yeah, absolutely. So, starting at the highest level, if you think about game purchases made on online stores, those will get captured as well as in-game purchases. So later on, I'll show a little bit of data around Roblox and some of the purchases that are made on that particular game and platform. But you also start to see other use cases as more kind of augmented reality type of shopping experiences are made available to consumers. We can start tracking those as well, and I'll have a nice use case to go through there.
Okay, great. And Neil, over to you. I mean, S&P is such a, kind of a big company. Where are you guys deriving these insights from?
Yeah, great question. Of course, we dig through a lot of publicly filed documents. We have a lot of survey data in the field. So we sort of weigh those against one another, and then we reach out to various sources we have, vendors, upstream component suppliers, retailers in some case. We sort of put all that data together to size up and break down markets.
Cool. And one of the things that we always use to as a barometer is just the number of questions we get from our Data Hunter app as people log into Ensemble. And that was one of the reasons we kind of even did the TECH.M.E, technology, media, entertainment theme. And one of the things we consistently get asked about is kind of the chip shortage. And it's not even one area. It's automobiles, it's cell phones, it's OLED TVs. I guess, Neil, if we jump into it, what are you guys seeing as the effect of the chip shortage kind of on the video game kind of space?
Sure, that's a great question. So what we're sort of seeing compared to the previous console cycle in 2013, when the Xbox One and PlayStation 4 were released, is that the early adopter pool has grown. So even though you're hearing a lot of stories about people are desperately trying to click on orders as they go live on various retailers like Amazon and Walmart and Best Buy, that console vendors are still able to put more units into the field than they were in the previous generation. That doesn't mean that they're, of course, meeting all of the demand. There's still a lot of consumers going empty-handed. So I think in a perfect world, if the chips were there and all the upstream components were coming together, you would see probably a more significant bump year over year. So I think maybe you're seeing a more exaggerated trend in the PC hardware space where the graphics cards just aren't coming at all.
Interesting. Yeah, I mean, I know I've twin 10-year-olds and they wanted, consoles for Christmas. And I don't think I've seen an email or anything like that you could actually get one still in whatever it's June. So amazing that, it still hasn't opened up to that degree 6 months later. One question I had, because we had a webinar with App Annie maybe a couple months ago, and I was just blown away by the app gaming space and like the, those types of numbers. Is that driving some of that strength so that, you have people that can't get the consoles that are still, gaming fanatics that are playing it on their phones or finding other ways to do it? Or do you guys see that as kind of a bifurcated audience and, one buys one and one, plays the other?
You're definitely seeing an increase in mobile gaming content spend, software and services year over year in almost every market. That's really acute when you look at Asian markets, particularly China, where the mobile gaming is, there's the most engagement with mobile gaming in those markets. But Western focused publishers, your Zyngas, Activision has a pretty wide base of mobile at this point. They're also seeing year over year growth in mobile spending. Whether or not they're pulling that market off of the console, that's sort of hard to say, because you're still seeing console software and services revenue up, even if the hardware isn't reaching quite as many people as it could. The growth rate and the spend is still arching up pretty considerably. So you might see console players reaching out instead to maybe cloud gaming services like NVIDIA's GeForce Now. Maybe Stadia did a little better than it would have without pandemic-related demand and console shortages. But yeah, I would tend to lead to say that the mobile and console are sort of bifurcated, and there's probably not much cannibalization at this point.
Gotcha. And then I guess, are you hearing about anything in terms of, the chip shortage ending, or, how that's relating to pricing? Like what's the current chatter in the market, or what are you guys hearing from, whether it's companies or, heard on the street, that type of stuff, of when the chip shortage would end?
Right. So I'll talk about the chip shortage first. What's happening is that almost all consumer electronics vendors and manufacturers are all grabbing for a lot of the same upstream components. So they're all lined up for the same manufacturing capacity and the same, Wi-Fi radios, Bluetooth components, what have you. And so as the year goes on and that demand is slowly met, you'll probably see a domino effect where laptops are taken care of and auto manufacturers are taken care of, and then maybe some capacity opens up for consoles. What we're sort of hearing from the vendors at this point is that late this year, maybe early next year, maybe the middle of 2022, something like that, is when you'll start to actually see the consoles, live long enough in the retail chain that they'll show up on store shelves.
Yeah, that makes sense.
Sure, yeah. And how that's affecting prices is a little more complicated. For consoles in particular, they want to keep that consistent pricing just to keep consumers happy. It can be a very mercurial fan base when pricing enters the fray. So I doubt you'll see the existing models go up in price. Maybe a price cut will be further down the line than it would have been otherwise. What you might see if Nintendo refreshes the Switch, they'll price that a little higher than they might have otherwise. Maybe they were thinking an updated Switch would cost $350, but they note that there's more demand in the market than there would have been when they were first thinking about it, and so maybe they'll stretch to 400.
Great. And Lauren, you had shown some interesting slides, so I'll have you share and have Neil stop sharing his, just around the gaming subscription side of things, because once again, one thing we've seen is SaaS companies performing, making it easier to get access to this, and gaming and being able to download over the internet seemed like such a natural extension. So what did you guys see in that space?
Yeah, so just to kind of give us a high level view here, what we're looking at is video game spending over the past year compared to 2019, just to really give us a consistent view. And just across the category, we saw accelerated growth, high range in the 70%, and then kind of probably averaging around 60% over the past 12 months or so. But to go down to your specific question around kind of subscriptions, we really decided to dive in deep onto Roblox and look at two kind of key KPIs here. One is just number of transactions as well as the average ticket. And the way that we looked at it is a rolling 4-week and then a 2-year stack to, again, account for the fact that, the past year has been quite unusual. And what we see is transactions, spiked up at the beginning of the pandemic last year with the lockdowns, large number of transactions occurring, see a slower ramp up in terms of the average ticket, but very, very consistent in the average ticket. And you can kind of see in the early parts of January this year, as well as in March, you see big ticks up that likely had to do with stimulus spending that tended to translate into discretionary purchases. But you actually see a dramatic deceleration in the growth for the number of transactions that are occurring. And part of this you can start to think as, primarily younger consumers start, doing normal activities or quote unquote normal activities. They have less time on the Roblox platform. So you do definitely see that deceleration. And again, just as a reminder, what we're looking at here is a 2-year growth stack. So it's not just looking at year over year, which should help us account for any kind of abnormalities from the base shifting last year.
Gotcha. So that, yeah, from a, with vaccination levels growing, with people getting back to kind of normal, that definitely makes sense to me. Like Neil, from your perspective, are you guys seeing that? Like what's your data showing? Maybe there's a seasonal effect where summer people are outside anyway, but if you can share share what you guys have been picking up.
Yeah, definitely. I think we're seeing largely the same thing in that through the pandemic, you see year-over-year growth rates and the entire global gaming software and services revenue spend. You saw a huge spike in year-over-year growth during the pandemic, sort of topping out in Q2. And then slowly as the year goes along, the growth rate normalizes, and then we see in Q1 21, which was still a winter month, which can be good for gaming, although Q1 historically doesn't have a lot of new releases. It depends on live services spend and catalog titles. We're seeing the growth rates start to come back down to earth as people find other things to do with their time, or they start going out a little more, or they're spending more time at work or school. And we're hearing definitely from the publishers that they expect that growth rate to sort of ameliorate further as the year goes on, and of course have tough year-over-year comparisons.
Yeah, no, that makes sense too. Great. And switching gears a little bit, we also have AR on the agenda topic, and Lauren, we had talked a little bit about that space, and I think I mentioned, like, okay, I keep hearing this is the year of AR, but this is the third panel after the third year that I've said that. So I'm gonna go to the data on this one and ask you guys, like, will next year be the year of AR, or like what's going on in that space? Because it seems like it has so much potential, but we're still waiting for the traction on it.
Yeah, so I'm definitely not going to sit here and call it the year of AR, but I do think there's some interesting data points that I wanted to share that we've been observing. So specifically what we looked at was a live streaming and live shopping event that Walmart did in collaboration with TikTok. And what we looked at is specifically whether or not those events had an effect on the transaction levels, the spend levels of millennials and Gen Z buyers. And so what we're looking at here on the slide is, this on the left-hand side is, every Friday from November through, January. And during the holiday season on the 18th of December, Walmart had a live shopping event through TikTok where essentially users were able to watch show from influencers and actually purchase the items that are being displayed right into their cart. And so what we actually looked at here is just, to make it easier to understand, we took that as a Z-score, and you can see during that event, during those 2 hours of the event, is a literally 3 standard deviations from the mean, right? Like, it's just a massive increase in spending that occurred for that demographic in terms of Walmart. And, across the board, you see throughout the other time periods, it's fairly nicely distributed and even. On the right-hand side, what we do is the exact same thing. So they followed up, as I saw in their press release, they said Walmart's doubling down further on TikTok. They followed up with an event in March on the 11th, and this one was now focused more on beauty as opposed to holiday. This had a 2 standard deviations higher increase in spending as well. So not quite as strong as what you see in the holiday timeframe, but again, just a significant change in behavior that they're able to drive with this particular demographic and this particular method of reaching them.
Yeah, interesting. I mean, as we talked about, like, TikTok, I think has been one of the surprises of last year and this year. Even some of the user-generated content sites, some of the encrypted messaging. So yeah, it makes sense that the more that these companies can explore some of these differentiated ways to reaching the audience, the better. So, but this has been great. I guess as we wrap up, are there 3 things that you guys are seeing from your data trend-wise, or what our audience should take away as data hunters, as analysts, as portfolio managers? What are the kind of the things, and maybe we'll go with Neil first, that you think are the most important that the audience should leave with?
Yeah, I don't know if I have 3. I definitely have one big one though sitting in the middle, and that's that video games are a nearly $200 billion market, and they really surged over 2020 as the pandemic drove people to try to find things to do while they were stuck at home. And that level of engagement will sort of taper off or moderate, but these are people that came back to gaming, and some of them, maybe many of them are going to stick. And so you're going to continue to see growth rates, maybe not at the 24% annual year over year that we were seeing in 2020, but probably double-digit growth rates are going to persist here in the near term, and that opens up a lot of different opportunities for both content owners. You're seeing people like Microsoft get deeper into cloud gaming, where they can open up an even wider market if they don't. If the requirement to play console-style games doesn't involve a $500 Xbox, where you can just turn on a smart TV and access their cloud gaming service, that opens up a much wider base of players. There's also a lot of growth still to be done in mobile. There are companies, again, leveraging cloud gaming that can bring a wider base of lower power mobile devices into the fold as well. And so what we're seeing is just a really big market with lots of room for opportunities to grow. And the pandemic was certainly a catalyst, but it's not the end of the story either.
Yeah, well, hopefully we don't have another one next year. So like it's good, and that
Absolutely.
I kind of get what you're saying. It makes sense because it almost accelerated some trends, like even the work from home stuff. Like, there were some companies doing it. The pandemic accelerated that, and that not everyone's going back. Like, it'll at least be hoteling, or there'll be some new form. So it probably accelerates things. But you can't. Trees don't grow to the sky, as they say. But how about you, Lauren? What are some of the takeaways that you have?
Yeah, I think very similar to what Neil was sharing there. I think just kind of quickly, right? So video game spending continues to grow at an accelerated rate. I think exactly to Neil's point, it can't stay that way forever. It'll probably come back down to some more, reasonable rate. But I think the second bullet here is really important to note, and we're going to be monitoring this closely, which is essentially in-game purchases and currencies. Those transaction sizes have been really steady. There is definitely some sensitivity to influxes of cash, but the reason I want to call out this point is what I'm curious about looking at is whether the consumer behavior has changed, where any discretionary funds that would have been otherwise allocated to like movies and those types of experiences have really just permanently shifted into the video game space. And we'll see more of that as movie theaters open up further. We've already been tracking the fact that movie theaters are really accelerating in terms of getting back to a normal rate. And it'll be interesting to see how that affects video game spending for sure. And then finally, as we had just talked about, these live shopping experiences really are showing a economic benefit for the retailers that they're leveraging. So I think this is something to keep an eye on, and I would definitely think we'll see more of this moving forward.
Great. Well, this has been extremely helpful. To the audience as well, as we'll put up on the screen if you'd like to learn more about Factious and meet with Lauren, or learn about the different offerings S&P has and want to meet with Neil. You can do that through our Connect meetings. Those are great because especially with Ensemble, you can access a lot of the data, ask them questions directly, get right to the source, figure out whether you should stay long video games or, what was it, sell in May and go away. I guess it would have been a little bit earlier, but this has been great, guys. So thanks for joining.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now.